compared to the profit I'm looking at these previous highs. So you can see that I've got a good risk to reward looking for an entry. So what are those different types of entries? We're going to look at in this video that set and forget strategy entry, the confirmation entry, and as well as the confirmation entry, we're going to look at the one candlestick entry using a confirmation of a area of supply and demand. And that's exactly what you're going to find on this trade that I've taken down here based on a candlestick pattern on a 5-minute time frame where I'm now in all this profit in the market and there was only a very small stop. This is my stop loss and this is all my profit in the market. So if you want to see exactly how I took that trade and how you can start using these types of entries with the use of a candlestick, make sure you watch this video all the way through to the end because it's going to give you a great new concept on how to take trades with your supply and demand strategy. So first, let's look at this US dollar CAD pair and we'll go through some of the areas we can be looking to take a trade based on these areas here of demand that we're seeing being produced all the way up, and why you should be taking a set and forget strategy entry or be looking at taking that confirmation entry. Now, at the end of this video as well, there will be a video for you to go through on an entry I took at this area here of demand, on this area of demand, when I took a nice entry to the upside before we saw this big bearish push to the downside, which was created by a news event. And you'll be able to see exactly the steps or those 3 secrets for you to make more profit winning trades, understanding those 3 secrets. So make sure you watch that video at the end of this video. So let's go into this first part of this video, understanding the set and forget strategy. Now there is a video all about this set and forget strategy in this channel, so I do suggest going and watching that as well later once you've watched this video and the next video at the end, just to understand how you would use a set and forget strategy in your own trading. But we're going to look at these areas of demand that are being created as we break out of structure. What do I mean about break of structure? That's the most important part to your supply and demand strategy. Once we see the market actually showing you these drops to downside, we're waiting for a break of structure. Now that happens right here in the market when we have this bullish candle breaking these highs. That's confirming a break of structure, and we've left this area of demand. At the same time, we have break of structure here. So when the market comes back into this zone, this is where you'll be looking for that traditional entry with the set and forget strategy. Now, how does that actually work? You'll be looking to take an entry at the open of this last bearish candle where you'll be drawing your zone and you'll stop at the low. Now, there's more information on how to draw your zones of supply and demand throughout this channel. Now, there is much more taught inside my courses, which is the Advanced Supply and Demand Trading course and the Masterclass. I will leave the links for those below in the description of this video. But when we see the market breaking the structure, we're going to place this as a limit order trade, and you'll be looking to enter the market when it comes into the open of that bearish candle. You'll stop at the low, and normally you'll be looking for your first target, those previous highs, and then perhaps holding the trade on your second half of your trade. This is the approach you'll be using on a set and forget strategy. Now, when it comes to a confirmation entry, when the market comes back into this zone, this is where you'll be diving deeper into your lower time frames, looking for that reversal out of this area of demand on a 4-hour time frame. And that is how you use the 2 different types of approach. Now, the difference is that when you're going to be using that lower time frame entry on a confirmation entry down here, you're going to be having a much higher risk to reward. So let's look at this first on this approach with the set and forget strategy. Having an entry here with a set and forget to those previous highs, we're only going to look at the previous highs so you can see the difference. We have got these previous highs here, we've got a 2-to-1 risk to reward. Now, if anybody would like to know how I set up my fib tool with these risk to rewards, please leave a comment below and let me know if you want those details on how you can set that up yourself with your own fib tool. Now, the pros when you're using a set and forget strategy, you can place this trade, walk away, you don't have to monitor the trade or even wait for the market to pull back. You'll be looking at a trade once you've seen the close of this, say, bearish candle here, and you're expecting the price to continue to fall back to this area of demand for your entry. That is the approach with set and forget strategy. It gives you that time to place that trade and you don't have any stress on yourself watching the charts. That's the main reason many people fail at trading. Their emotions are affected when the money's on the line and they're physically watching that movement candle by candle. Now, when you're having a confirmation entry, which we'll look at in a second now, when you're having that entry here, you've got to monitor that trade and keep an eye when the markets pull back in and you're looking for that reversal. So let's now look at this here on the chart on a lower time frame, and we'll have a look and see what the confirmation would actually give you and how you'd approach that entry yourself using a supply and demand strategy. So let's go to that area on the chart. When we come into this area of demand, there are different techniques on the way you look for a trade. Again, I do teach all that inside the masterclass and the advanced supply and demand trading course. But when we see the market pulling back in, the first thing you want to look at is the market structure. So we start to see the market pulling in and we drop down for the last time. When we're seeing this, your typical break of structure is going to happen here. This is then going to leave behind an area of demand that we'll draw out. And this is where you look for an entry back into this area of demand, targeting these highs here. And as you can see, that is a powerful move to the upside. And that is how you look for the confirmation entry, confirming this area of demand on that 4-hour time frame where you would have had that entry to set and forget. Now that would give you a trade from here, and that would be just over a 5-to-1, nearly a 6-to-1 profit. Now the set and forget was giving you 2-to-1, so you've more than doubled the profit potential using a confirmation entry. So if you do have the time to study the charts, and I do suggest going through one of my courses to help you further your education on the best way to take these types of trades and for your targets, and more importantly, your risk management, your risk and money management. And on that subject of risk and money management, if you want to learn a way to apply risk to grow your account without the risk of blowing your account, I'm going to leave a link below for a pre-recorded webinar which will help teach you great risk money management for your own trading. And again, that's linked below in the description of this video. But based on this type of entry, the confirmation entry, you can see it's going to give you a much higher risk to reward, and you've caught all this movement to the upside. Now, once this happens, you can see the market pulls back again. So let's now have another look back on the 4-hour time frame of what happens here in the market. So when we see the market pulling back once again, we then can draw another area of demand right here. Now going down to 1-hour time frame, I think we're going to find a better zone. So we're just going to quickly go down to a lower time frame. We see this candlestick here. It's an indecision candlestick, and I would not look to draw that as my zone. But dropping down to a 1-hour time frame, you're going to find a better candle we can draw this off. Now again, I do not like any of these candles. This is the only one I would draw my zone from. And as you can see, the market comes in on this bullish candle. Now look and note, when I've drawn my zone using that candlestick, you can see the market doesn't actually come into the zone on that one there, and eventually we then drop in. There is a way you can look to stop getting caught out in the market on the wrong side, understanding where those banks are moving the markets and trying to manipulate you to being caught on the wrong side. And this is in fact a pattern that we see in the market over and over, and that is something that you learn inside the Forex Masterclass. So when we see the market dropping into this area of demand, let's go to a lower time frame again of the 15-minute. And on this occasion, we don't have a break of structure until we see the break of this high, which is going to leave behind this area here of demand, and the market never pulls back in. So there's no entry on a confirmation entry there. Now there was on a set and forget. If we go back quickly, you'll see a set and forget entry would be off this entry here. And let's move that. We'll see that we have, back to these previous highs, a 2-to-1. So using that 1-hour time frame, in fact, we'll go back to the 1 hour first, just show you that zone. This is the zone, this is the entry, previous high, we've got a 2-to-1. That's using the set and forget strategy. We know the markets are going to go that direction based on this nice big bullish movement to the upside. Now keep watching to the end of this video and you'll find out exactly why I've took this trade down here using a candlestick entry, which is a different way of taking an entry, confirming this area using a confirmation entry with a single candlestick for your entry. But I'm also going to show you all the way down to the 1 minute time frame how I still confirmed that candlestick to make sure I was taking a good trade. Now when the market does pull in here, again, let's go back now to a 5 minute time frame instead of that 15. Understanding the different me just remove this fib tool. So now we're on a 5 minute time frame. You can see the market comes in and then we break this area of structure with this bullish candle. Now that's left behind this area here of demand. And again, we can see the market does not pull back in. So you're not always going to capture that entry with a confirmation entry. That is the problem using a confirmation entry, that sometimes you will miss that trade altogether. One of the cons to the confirmation entry is going to be you can miss a trade. And obviously the pro is your risk to reward is going to be much higher. So again, going back to a 4-hour time frame, on that occasion we can see it worked out better using the set and forget strategy. Now if we go to this zone, again we can apply that set and forget strategy. You can see that this will be your entry, your stop loss using that candlestick. Now you may be able to find a better zone on the 1 hour, we'll check that in a moment. This would be the target, so we're looking at just over 1-to-1 risk to reward. There'll be a 1-to-1 and about a half there, it's 1.5 to 1 risk to reward. That is using the set and forget strategy, it worked out. Looking at the next area of demand was created, this area, you can see the market just plummets straight through. And this is an occasion where this is the news has come out. If you know ahead of time that you've got news, then using the set and forget strategy may not be the best time to use it. And that's where you want to use a confirmation entry to look to confirm that zone to take that trade. So always understand what's happening in the markets and fundamental with the use of news. So looking at this entry, let's have a look at this one. And in fact, I'm going to go down to 1 hour first just to see if there's a better candle in that area. Well, again, this is the candlestick I'd use. And this would be the same area really, same kind of size of zone. So let's go down to 15 minute. And we're going to look for that reversal. Now on this occasion, using a confirmation entry, if you'd seen this, you may think this is in fact a reversal. You may have drawn this as your area of demand. And the market, depending where your stop loss was sitting, if you had your stop a good few pips below the low of this candle, you'd still be in this trade, you wouldn't be stopped out and the market's gone higher. So understanding where you're actually placing your stop is critical when you're taking a trade. Always give that trade some room. If you didn't take that one or you got stopped out, your next area is going to be a break of this area structure, and then you'll be taking an entry off this zone. And you can see the market pulls back in and up we go. So if you got stopped out on that one, don't be discouraged. Take the next one and you can see it worked out fine. Now again, we saw the last trade was around just over that. I believe it was just over 1-to-1, nearly 2-to-1. If you're taking this as an entry here, again off this zone, we've got a 5-to-1 to this high. And if we go back, we've got this high here. Let's just have a look where this high comes to, nearly a 6-to-1 again. So you can see the risk to reward on that trade is much greater. So if you do have the time to trade the confirmation entries, it's going to give you a better risk to reward every time if you understand what you're doing. So when we see the market dropping down, this is the bit you've been waiting for, how I took this trade. Now this trade is based on a candlestick entry, but I'm going to show you how I confirmed that candlestick for an entry with the use of these entries with a supply and demand trading strategy. Now I do have a zone here drawn, which you may be wondering, why have I got a zone drawn with this wick? Well, looking at this chart first on a 4-hour time frame, you don't have a good zone to draw based on what we're using as a candle. We have indecision candles here. We have a big wick to downside. So this means we need to go down to a lower time frame to find a good zone. And we go to a 1 hour time frame first. You're going to be able to identify this is this zone on the 1 hour. Now we have the market making these new highs all the way up to here. You have new higher lows, and you can see this big bearish candle created by news, and you can see the force it had to downside broke all these lows. So when I saw the market coming back to this area of demand, I wasn't interested in taking an instant entry. Even though it's worked out very well, there was a manipulation of this trend line to the upside and all these lows, picking up a nice trade to the upside. Now I could have taken that, but I wanted to confirm this entry. And what I've actually done here to confirm this entry, I've dropped down to a lower time frame of 5 minutes, and I've looked for a price action signal. I've waited for the market to slow down, waited for the news to level out to see which is the correct way to trade this market. Now we also had left over here an area of imbalance, which I wanted to see filled. And you can see this was filled on this spike to downside. This is another reason why I didn't just jump in on this trade. I wanted to see this area of imbalance filled. I wanted to see the market show me the reversal out of this area of demand and then give me an entry to go to the upside. So I was confirming this entry, not just this selling for gain strategy. So I'm marking off this area here. I'm going to go to a 5-minute time frame. This was the area I wanted to look for my trade. Let's find the zone. So the market came back in. You can see straight away we had that reaction with the reversal to the upside. We then pulled back and we created this nice looking pin bar. That was my entry, understanding the actual pin bar. Now you'll see on a previous video went through a strategy you can use in the market. I'm going to leave that video linked above now, using the pin bar, but not in the way you're expecting. And it's going to show you a reversal in the market before it happens. And that's a great way to look at taking a trade in the market when you're looking for an entry with a confirmation entry out of an area of supply and demand. That's linked above. Go and watch that video. After you've watched the video at the end of this video, they are 2 great videos to help you in your trading with a supply and demand strategy. Now, how would I know to confirm this? Because we haven't at this point broken structure. This is our last high in the market and we haven't broke that high yet. We're now heading back up to that high. So how would I confirm this entry on this candlestick? Well, let me just highlight that candlestick first. Let's just box that candlestick in. I'm going to show you now using a 1-minute time frame, confirming it with a 1-minute reversal. So we have the market coming into this area here on that 1 hour. We've already filled the area of imbalance. We have this drop, base drop in, and we rally out, breaking the high of this candle. Now for me, it's not a confirmed break until we see the break of this candle high with this bullish candle right here to the upside, this one here. Once I've seen this is I'm going to draw out an area of demand. Now you can draw out for this smaller zone, or you can go to the low to give yourself some room. Now for me, I was looking at the reversal to confirm that 5-minute entry on that candlestick. I didn't take an entry on the 1 minute. I actually was watching the 5-minute and then I looked at the 1 minute and this confirmed my entry. Once I saw the close of that candlestick, this is my entry I've taken. So I've got a small stop on this trade compared to the profit I'm looking at these previous highs. So you can see that I've got a good risk to reward looking for an entry using a confirmation entry. Remember, the pros to confirmation entry, whether you're taking the break of structure or candlestick pattern, you're looking for that high risk to reward. So that is exactly how I've taken that trade. And we just zoom out now. You're going to see that the market has gone sideways. We did eventually go up. We pulled back. I've taken some profits on the way up. The market is now showing me that higher low situation, higher high inside this larger area. And we've got an area here of supply that the market's now going to go into. I'll be watching the markets there to see if we break it. I'll probably be taking off some more profits in that area as well. So that is the different types of entries you use with a supply and demand strategy. Now popping up now is the next video I want you to go and watch, which is going to help you to identify those 3 secrets to finding more higher profitable trades, which is going to help you with these entries on your supply and demand strategy.